Hello and welcome to another episode of the Investing with IBD Podcast. It's Justin Nielsen, your host, and we are coming to you live a little bit early today. We're heading to you at 4:30 p.m. Eastern Time. Unlike our usual 5 p.m. Eastern Time, but that's okay because we've got a special thing going on here. It is August 20th, 2025. And usually we do talk a lot about the trading and everything like that. But today we're going to focus on a particular stock, Robinhood. And who better to kind of walk us through some of the fundamentals than the Chief Brokerage Officer, Steve Quirk. Welcome to the show, Steve.
Thank you. Thanks so much for having me. I'm really happy to be here.
Well, we are happy to have you because Robinhood, it's been getting a lot of attention from our subscribers, our readers, our listeners, from all walks of life. And I'm just going to pull up a chart here real quick to kind of show the reason why. I mean, it's one of those things where Robinhood, since the 2022 doldrums, the bear market that we had there, and maybe some flat action here in 2023, but 2024, Robinhood really came up in a big way, and it suffered along with everything else in the kind of tariff mess in March and April, that quick little bear market that we had, a crash almost, if you will. But now this rally, it is gone from 30 back in April to nearly 120. So a completely, what we call a model book stock move. And we, of course, at IBD, we like to do a combination of both the fundamental and technical, but I'll be honest, a lot of times we lean on the technical. So what I'm hoping to get here is a little bit of that fundamental story from you, Steve, because I'm looking at the earnings here, and I mean, they're pretty spectacular. Triple-digit earnings growth, some triple-digit revenue growth a few quarters ago, but very solid, 50%, 45%. What's the story, Steve? How are you guys doing this? What's happening?
Well, first of all, again, thanks for having me. I would say it's really it's a kind of across the board. Just we're starting with just delivering for our customers. We have 26 million customers, and average age is early 30s, and half of them would be first time brokerage customers. So they started with us in their 20s, and now they're sort of progressing
Hmm.
to the next phase of their investing journey. And so along the way, we're just delivering for them all the things that they're looking to utilize, whether it's retirement account yield, um, you know, expansion on some crypto, and a host of other things that at this point in their investing journey they've been looking for. And as a result, they're rewarding us with both more assets, and we're seeing more people come in, um, along with the all the metrics that you were laying out. We are seeing just very strong growth in our equities trading, in our option trading, in our crypto, the deposits. I think we've been
Hmm.
over 40 some percent growth every year over year. So, we're kind of at a spot where, if you think about our customers' age, they're at their prime. Um, well, they're starting to accumulate more
I
wealth.
would say early, kind of in their
Well,
in
they
their
are early, but they're
yeah,
also there's a host of things that are happening, and we'll kind of get into those a little
yeah,
later or whenever you'd like. But there also is this wealth transfer that's already begun.
right.
And again, the number keeps going up every time I read a new a new piece of research on it. It started at 74 trillion, now it's 124 trillion. And what's really interesting is the people who are going to be the recipients of that wealth transfer are sitting here at Robinhood.
Hmm.
So, it's funny because if you talk to people in the industry, advisors or others, they say this is going to be a strange decumulation of wealth, in that a lot of the people that have this wealth have lived such a good long life that their kids don't really need it. So it's like it's almost going to get passed down another generation to their
Yeah,
kids.
yeah. I'm Gen X, so you're basically saying I'm getting skipped, right?
You are getting skipped.
Thanks for breaking it to me gently, Steve.
That's exactly right. And so, like, those these kids, we'll call them kids, they I mean, although they do have similar investing behaviors, they also have different investing behaviors, and so there's an opportunity there, and
Hmm.
we're tapping into that and understanding exactly what they would like.
Yeah. Now, it seems like there was a little bit of an uphill battle here because
Hmm.
certainly with the millennials, and I mean, look, I'm on the younger side of Gen X. I started in '97 is when I started investing. I mean, I was still making phone calls to my broker. It was $30
Yep.
each way, each trade, and I found out what my price was, with a phone call a few minutes later. Oh, did I
Hmm.
get filled or not, and everything. So now with millennials, a lot of them came of age during the great financial crisis, and
Right.
so there was this distrust of investing. For me, I was told .com crash was a once in a lifetime event, and then I was told the great financial crisis was a once in a lifetime event, and then oh, COVID. Hey, don't worry, that's a once in a lifetime event too. So we've got our full share of once in a lifetime events
Wait,
here.
I
So
can add one, Justin, because I started 10 years before there.
oh,
The
so you got
87 crash, I was on the trading floor.
okay.
That was on that's a once in a lifetime event too.
Yeah, yeah. So yeah, so you've seen your fair share of once in a
Yeah.
lifetime events. So, it seemed for a while there that there was a distrust to a degree
Hmm.
by the younger generation. So, did you have to do anything to kind of build that trust
Well,
back?
I think it's not only it's not only I would call it scars on the
Right.
generation that got impacted. Think of the 58-year-old couple and their kids are sitting at the dinner table in '08
Hmm.
talking about, oh my gosh, our portfolio is down 35%, and their kids are listening to that.
Yeah.
And they're like, oh my gosh, I know what I'm not going to do. I'm
Hmm.
not going to get into that because there's a risk that, I could have to work another 10 years instead of my plan to retire at whatever age. So I think it doesn't only scar the generation that's impacted, but it scars the family as well.
Right.
The one thing I would say, because we've seen it now with COVID,
Hmm.
we've seen it with the tariff news, we've seen it with a variety of things. I think that the younger generation of investors like there's so much good education, so much good content out there that they really understand the impact of compounding and
Yeah.
getting started early. And they also understand, as counterintuitive as it sounds, when you're young, you should be aggressive.
Right.
Because guess what? Even if I start investing today and for the next 5 years, the market is down, I'm going to tell you in 25 years, you're going to have roughly a 10% return and
Hmm.
you're going to be in really good shape.
Hmm.
You
Well,
can't you can't do that if you're at the latter stages of
right. You
your.
can't be aggressive. Yeah.
No, no, you
Yeah.
don't. You shouldn't be,
Yeah.
but you should be at this age. So, like, we've seen that behavior, and
Hmm.
we've talked about it in the media and to the industry professionals. We said, look, oh my gosh, your customers are buying the dip on the tariff. What if it kept going? I'm like, well, they understand that. Like, they
Hmm.
understand, like, hey, I just bought these Mag 7 names that were 40% cheaper than they were a month ago. Like,
Hmm.
I'm okay with that, right?
Yeah.
So I think it's an interesting phenomenon.
Well, and I want to kind of circle back because you talked about how much content there is out there now. I mean,
There is.
there is so much. I mean, we're on a investing podcast right now,
Yep.
but I would almost push back a little bit because yes, while there is a lot of content out there, sometimes that can be a bad thing, right?
Hmm.
There's so much noise and contradictory advice sometimes. So how do you kind of get through that noise to get your message across as a broker, and again to try and help your clients,
Yep.
because again if you can help them make more money, they're going to probably stick with you and the assets will grow, everybody's happy. So how do you do that?
Well, I would say number one, by providing them education, both, in separate education, education within a learning center, but also in the pathway of when they're making investments or looking at their portfolio. I can give you a real world example of this because I have three daughters that are all
Hmm.
in their 20s in the working world. I'm that annoying financial father that says, your money has to work as hard as you work for your money. And so
Hmm.
by the way, funny story, when I was giving them those lectures, I was working for Schwab, and they
Okay.
and they finally take me up on it, and they come and show me their Robinhood app, and I'm like, what is that? Like, we work for Coke. You don't drink Pepsi.
Yeah,
Like,
you traders.
what are we doing here? And they're like, hey, we're doing this the way all our friends and cousins are doing it. So I'm like, okay, touche. Yeah. So I like to say I followed my kids over here.
Right.
But my daughters would be like, since I'm the person who helped them and pushed them to get into the market, and pointed out, even if you're not investing, we got an account that's yielding 4 or 5% as opposed to your bank, which is 1/10%.
Right.
So when the market was going well, like, oh my gosh, Dad, this is great. Yeah, yeah. And then all of a sudden the market isn't going well. And they're like, what did you do to us? Why did you
Right.
do this? And I'm like,
How could you?
let me be crystal clear. I am not the market. Like, I am not the person who decides if we're going up or down. But I can't use the word guarantee because it's not allowed in our industry. But
Hmm.
I can assure you that if you stick to, timely investing in 20 years, you will be very happy. And one of my daughters, like, I don't know if I should do it. I'm like, so we have something called recurring investments, which
Hmm.
means I put in $50 every month. I pick all the securities that I want to pick, and I don't even have to think of it. And I'm like, there you go. Do that. Take the emotion out of it. If you want to look at your portfolio, look at it. If you don't worry about it. It's automatically, going to go into it's going to say, basically replicate the portfolio you have and allocate however many dollars you want to each one of those securities. So, they use that. So I
Yeah,
think
and
in
just to be
some ways,
clear, that recurring investment is a feature on your app,
it's
right?
a feature. Yeah.
Yeah.
So
Hmm.
like in many ways you can help people because
Yeah.
there's other people who just say, look, I don't have the time. I'm
Hmm.
at that age where now I've got a couple kids, I bought a house, I'm busy. I don't have. When I was younger, I had more time to be spending time doing research and being self-directed and going back and forth. But now I don't. Well, we can help you with that.
Yeah, and it kind of reminds me of the what is that book? There's a book by Richard Thaler, I believe, called Nudge.
Oh yeah, yeah,
Yeah.
yeah.
So
Mhm.
it's again, it's not overly, it's just here. We're going to remind you every time you open the app that
Yeah, yeah.
this is something you can do.
Well, but even down to like we rolled out a retirement offering about 2 years ago. Because look, I mean, we were told loud and clear by our customers, like, we have assets elsewhere. We don't want to be elsewhere, but you don't have, retirement accounts
Hmm.
for us. And so when we did it, we spent a lot of time doing a lot of research, and probably like 40% of our customers are either completely self-employed or partially self-employed. And so
Hmm.
they don't have a 401k in some instances. They don't have somebody doing a match for them. They don't have them and somebody incenting them and helping them create, the wealth that they're going to need for retirement or whatever they're using that 401k for.
So you're talking about like SEP IRAs and things
Yeah,
like that, or
exactly. So we created a program where we said, look, we're the match now. Like, if you contribute your max of 7K,
hmm.
we'll give you 3% on that contribution
Oh
every
wow,
year.
okay.
Now, a lot of brokers do, hey, I'll give you X amount of dollars if you bring it over, but that's
Hmm.
not creating an incentive for them to regularly contribute. And then you see your contribution. How much have I contributed this year? How close am I to what I should be contributing tax free? And then they're doing that. So I think like those kinds of things, I think help customers, help retail investors, make it easy to do what they should and probably likely will be beneficial for them in the long run.
Yeah, no, I mean, again, the more you can make it easy for people, right,
Hmm.
and get across those barriers. But Steve, you're telling me about some things that sound like costs. If you wouldn't mind, can we switch to how are you making money? Because again, the commission-free trading
Yep.
was a big revolution.
Yep.
Again, you know, I, I was considered lucky. Only paying $30,
Yeah.
when I started. That was
It
like,
was a
oh,
hundred when I did.
right, yeah. Oh, you don't know how good you have it,
Yeah.
and oh, you can call your broker and get an answer in like a couple minutes.
Yeah.
That's amazing. So how are you making your money if you're not making it on commissions?
Yeah.
You're giving money. You're acting as the match for some of these folks.
Mhm.
Where does that revenue come from? How are you able to post those triple digit earnings growth
So,
numbers?
even though we're not charging a commission, if you think about the scope of everything that we do, and let's just start with transactional, obviously the PFOF, payment for order flow,
Hmm.
is a component for both equities and options. In to a lesser extent on crypto, it's just the spread. But we also have securities lending. We also have a yield product where we're paying, but we don't pay. Of course, there's a small spread in there,
Right. Hmm.
and then there's a variety of other products that just help margin that help in that context. The question that we get more specifically is, we do some matches for people who are going to bring dollars in
Hmm.
periodically. Like we'll say we'll give you 1% of the value of your account if you move over here.
Hmm.
And we get a lot of questions from retail analysts and others, like, how can you make that profitable? Your competitors are kind of, some of the ones that I used to work for are scratching their heads. And I just say, we are technically a technology firm that's in financial services. So we're 2,400 people. We're not
Hmm.
30,000 people. And
Okay.
so, like the efficiencies that we have, we're able to deliver a lot more value to a customer just because we are so efficient,
Hmm.
and reward them. And that turns out being meaningful in the long run from a return standpoint for them.
Hmm. Yeah. So, to that end, I mean, it just kind of reminds me of a lot of the financial advisors, of course, were a little bit scared of the robo
Yeah.
advisor, right?
Yep.
So, is it kind of similar to that? You're using that technology in that way to create those efficiencies and create that education, create those incentives, or how are you using the technology exactly to kind of reduce the cost side on your overhead there?
I would say it's used from every facet of
Hmm.
our operations and everything. Every facet of the offering. Like
Hmm.
we can do a lot more with fewer people because of technology, and we are a technology firm. So of course AI is now in play
Right.
and helping us from an efficiency standpoint there, which we're leaning on heavily in all facets of the business. Um, but I think, yeah, to your analogy on a robo, it's really interesting. I think Robos came out in about 2010, and at the time, I was working at TD Ameritrade, so we had two parts to our business: the
Hmm.
self-directed side, which I worked on, and then the RIA side. And
Hmm.
there was a lot of fear by advisors that this was going to be something that could potentially jeopardize their business model.
Hmm.
That didn't turn out to come to fruition, because I don't know if you remember what happened, but essentially there was keen interest in robo advisors, but as soon as there was a downturn, um,
Yeah.
you couldn't call them, and they locked you out from selling. So
Well,
like,
and then you also had the 60/40 rule kind of blow up for a second there. So
and,
it's
and
like this is almost always works except for this time.
exactly, and people quickly said, like, the whole value of having somebody
Hmm.
manage this, whether it's automated or not, is having not a guarantee, but like a security uh, uh, aspect of it. In other words, like, I want to know how my money's being managed. I want to know that I have access to it. I want to know I can get out. And those things kind of fell apart a little bit. And so I think that aspect wasn't something that really helped the robo advisor. And by the way, the way that the RIAs eventually, I'm using my words, but the way they eventually sort of understood the value of a robo is, it's like another tool in their toolkit for
Right.
them, to use on a customer basis. It kind of takes me to a little bit of a larger point, which I sort of brought up around the retirement account. Like, in our view, your finances, you should not be tied to a, so in other words, today's day and age, look, not you, you're younger than me, but when we went to work for a company, we worked for a company. Yeah, you got a 401k.
You,
You know,
mhm.
you were working for that company for a very long period of time. Today's day and age, people move around a lot. And even my own daughters, who are one's only 30, she's got 401ks in like three different places. And she's like, I can't keep track of where this, I mean, like, we love the concept of you having the agency. It's my money. I shouldn't be dependent upon whatever firm I decided to work for or whomever I'm doing my self-employed work for. Having a plan that, like, it should be my account,
Mhm.
regardless of what I do, where I go. If I want to be self-directed or sorry, self-employed for a period of time, then go work for a company and do it here. And we kind of envision a world where that's the model, but it also exists from a self-directed side. So in other words, if I'm having success in a self-directed account and I want to take a period of time where I don't work, maybe I'm busy and with family, et cetera, and it gives me the liberty to do that, that's amazing.
Right.
Like, we
Yeah.
would love that to be the model. And then when I need to, I go back to work or whatever it is. But I feel like it gives you basically the freedom to be able to say, I choose what I want to do, and
Right.
I have the backing, of knowing that I'm able to do this from a financial standpoint on my own.
Yeah, and it sounds like that is something again generationally that's happening a little bit more, where they see the the I guess the warning of, oh, you've worked so hard. By the time you retire, you can't do any of the fun stuff that you were
Yeah,
saving
right.
for retirement. All of those
Mhm,
things. And so,
mhm.
yeah, it seems like a lot of the younger folks, whether it's with the fire, method, and all
Yep.
these things where they want some of that freedom as they're young enough to enjoy it, and they're
I, I,
they're willing to forego some some of that stability as a result.
I've,
Um,
I've had a lot of wacky, crazy ideas in
mhm.
my career, and one of them was exactly to your point. So many people, at least in previous generations, work to a point where they can't enjoy retirement when they get done, and so they have the financial wherewithal to do pretty much whatever they want, travel, et cetera, but they miss the window of when they can do it. So I always thought it would be cool to have, like, within a almost within a platform, to say, like, I'm going to do a reverse mortgage on this kid that just got out of college, and say, listen, go travel the world for 2 years, but then you're repaying me, because I'm going to forward this to you, right? Wouldn't that
Right.
be super cool? Now, your
Hmm.
only risk is that person never really gets a job.
Yeah. That they get a little bit too used to the
Yeah,
easy
but it would
life.
be,
Yeah.
but it
Yeah.
like, you're in the prime of your life when you want to enjoy everything. That would be super cool, right?
Yeah. Oh no, absolutely. Sign me up if you need a new kid. I'm down with that. Let's talk a little bit more about again the earnings and the revenue. I mean, again, this last quarter, I think you reported at the end of July. Really some spectacular numbers in terms of net revenue increasing. And again, it's coming from I believe options revenue was giving you a lot. Cryptocurrency is giving you a lot of revenue.
Yep.
There was also the interest with some of the interest earnings assets that you were talking about in securities lending.
Yep.
So there's I mean, look, this has been a good market, right?
Yep.
So how do you kind of keep that momentum going forward when some of this is completely out of your control and at times market driven?
Yeah. I think the parts that we always focus on is what we can control, because you're right, there's things that are out of our control. This is a very hot market, and
Hmm.
so you're right. In July, we had a record for our equity volumes, a record for our option volumes, a record margin balance, a record deposits. So not deposits in July, but for the quarter. So I think what we try to focus on is what we can control, which is everything that our customers are looking to do. Again, retirement accounts, and even advice. We rolled out something called strategies. Believe it or
Hmm.
not, even though 95% of what everybody does at Robinhood is self-directed. We have a large contingent of current customers who tell us frequently, "Hey, I was comfortable when I was in my 20s managing this pool of assets, and I did it myself.
Yeah.
Now I just got married, I have a kid, and I have a house, and I'm making more money, and my
Hmm.
pool of assets has grown. I'm not comfortable managing all that right now. I would like some help with some component of that, and I have it somewhere else because you don't have a solution for me." So, we built that solution, which is strategies, which is
Hmm.
equivalent, similar to a robo. It's different in some aspects because it's a little more actively managed. Um, and we also bought a firm called Trade PMR, which is an RIA firm. So
Hmm.
they are a full $40 billion firm with 340 advisory firms and thousands of advisors, because there are customers, again, through the two things that I've mentioned, them getting to a point in their journey where they want either complete help or partial help,
Right.
but they're also going to starting to become the recipients of this $124 trillion wealth transfer. And when that gets dropped down, though, you don't just say, "Oh my gosh, I have X amount of dollars, I'm going to, do the same thing that I did previously when I was self-directed," because that's a little overwhelming for some people.
Well, speaking of acquisitions, I want to talk a little bit about your acquisition of Bitstamp.
Hmm.
You know, certainly one of the things you and I were talking before we started. I personally am just so uncomfortable with getting a crypto wallet because I know I will lose it, and that money will be gone forever. So I don't think I would ever do it without a custodian, to manage that for me, so I
Yep.
don't have to worry about that. So, was that Bitstamp acquisition kind of sealing the deal for you in that regard? It feels like the move in Hood was so correlated with moves in crypto for a while. So, how much
we
is that
we
crypto kind of?
we still have a pretty strong correlation because
Mhm.
we're, if you think about it, in the U.S., we're one of companies that is an established brokerage business and an established crypto business. Usually,
Mhm.
there's one or the other, and a scaled one at both. And by the way, we will do that. We will custody, or you can custody yourself.
Mhm.
The Bitstamp acquisition was more about our capabilities on the institutional side and
Mhm.
licenses in Europe, all across Europe. And so, and another component of it was, when we made that acquisition, there wasn't as much clarity on where we were going from a regulatory standpoint in crypto.
Yeah.
Like we played the very safe game. Like, we didn't have thousands of coins, we didn't have staking and lending, we didn't have all these things because we weren't sure it was going to be deemed a security or not deemed a security. And so we were very careful to, we're heavily regulated on the brokerage side, and you know, we didn't want to do anything that would disrupt, other business. So we played it very careful, and that was another element of the acquisition of Bitstamp. But now we have the capability to do things on the institutional side. We were largely retail for crypto.
Mhm. Mhm.
And we also have international capabilities, which are great. Now we'll bring some of those capabilities back to the US because we're getting more clarity on exactly what's going to be permissible and what's not.
Yeah.
So I think those two things are the primary reasons. But back to your initial point, as we were talking before we began, I always make this, when people ask about crypto, and like, again, we were joking. I said, there, look, there's a percentage of our customers that the only wallet they're comfortable with is the one in their back pocket.
Yeah.
But that said, there's a lot of really, really big crypto enthusiasts in Robinhood, and
Yeah.
there's crypto curious people.
Mhm.
So, like, what we've noticed, at least what's changed pretty dramatically in my career, is when somebody is new and young and starting in the market. I mean, almost always their avenue into the market was, I bought an ETF, a stock,
Mhm.
a mutual
Mutual
fund.
fund. Yeah. Right.
And then I figured out, oh my gosh, there's other things I can do. Fixed
Mhm.
income. I could write, covered call on this, or I could even get into FX trading, or I could
Mhm.
trade commodities. I can do a host of other things once I sort of learned this. What's different in this generation is a lot of them come in through crypto,
Hmm.
and then they discover the other side of investing.
Oh, there's stocks too.
There are stocks too, and so like that. In my mind, like the one thing that I'm so adamant about making sure that we continue to drive on is helping educate customers to
Yeah.
be doing it in the right way. So like what just grinds, it's like nails on chalkboard, is when I'm listening to somebody and, oh, I'm so worried about this next generation of investors. They don't know what
Mm.
they're doing. They're going to get killed. I'm like, dude, you were young one time.
Yeah.
You made mistakes in your early investing. We all did. And
Right.
so like you shouldn't be lecturing, you should be helping people.
Yeah.
And
No.
that's really what we try to do. It look, if you come in through whatever app, even let's take it a step further. We had a large percentage of people come to Robinhood during GameStop and during the meme stocks.
Yeah.
And when they flared up again about a year ago, of
Hmm.
course, every media outlet came to us and they're like, "Oh my gosh, are you seeing huge volumes again?" And are are you like, is it the GameStop thing all over again? I said, we're seeing elevated volumes, but remember those kids that came in for that, they're a little older now. They have retirement accounts and they've they've moved into a different phase of their investing. But I said, the most important point is we went and looked. 85% of those people that came in, they're still here.
Hmm.
They're just investing in a different way. So to me, the point I'm trying to make is it really doesn't matter how you get interested in the market. It matters where you are and how you progress, because
Hmm.
that's what's going to dictate you having a good, long, healthy investing career.
No, absolutely. And I mean, look, there was a little bit of controversy. I remember your CEO Vlad had to kind of get on there a little
Yeah.
bit and talk about, oh geez, the the GameStop, and there was
Hmm.
at sometimes it's like, look, we're going to have to put restrictions on here because
Yep.
otherwise we are putting our entire business at risk if things go south. And that was a little bit hard to swallow for some folks.
Yeah. I
Another
mean,
controversy. Oh, go ahead.
no, I was going to say the growth was just so explosive.
Yeah, yeah.
The other part that I think, like, I'm not sure people in the industry understood it, but I'm not sure people outside the industry understood it, is other brokers were in the same situation. They were
Oh,
just
yeah, yeah.
they were just
Hmm.
ducking because all the arrows, no pun intended, were going at Robinhood.
Hmm. Hmm. So another controversy a little bit, and you mentioned this earlier as one of the places of your revenue is the
Yep.
payment for order flow,
Hmm.
which again it was this kind of controversial thing. It's like, um, oh, you're not doing commissions, but you're still sticking it to the customers in a
Yeah.
different way, or you're favoring the high frequency traders and stuff. What's kind of your response to that?
My response to that is, and I'll give you kind of two parts to the answer, because like at the highest level, again, I'm going to go back to my daughters when I first got them, investing, and they're like, what is all this payment for order flow? What does this mean? And I said, I can give you the simplest version. The simplest version I can lay out is Schwab, TD Ameritrade, E-Trade, Fidelity. They used to charge you $10. Well, it used to be 100, but
Yeah,
okay,
right.
when this was happening, $10 a trade. And what the brokerage firms, and Robinhood's the one who really, was the innovator here, figured out was, look, we are the people that are attracting these market participants in, and the market participants are benefiting from us bringing them in.
Hmm.
So instead of us charging them for the privilege to be able to trade with you, you should pay us the commission instead of the customer paying it. So this is the, again, very simple version. We're transferring the cost from the customer to the market maker
Yeah,
or
yeah.
the exchange, either
Hmm.
one, because they both are, it's similar in those instances, because ultimately we're all benefiting, including the customer in that
Hmm.
way. So that's kind of the super high level version of it. The deeper one is, if you look at, and again, we do this 606 reports quarterly. You can look at execution quality, like like, and we explain this to regulators and to elected officials and to market participants. Look at the world today. Like, I'm trading a stock and I'm getting filled, it's $10 at $10.10, and I'm getting filled at $10.02. So
Hmm.
I'm getting a better fill, and the customer is benefiting on that. We're benefiting on it, and the wholesaler is benefiting because they get to interact with that, interact with that flow. So, in my mind, it's kind of beneficial across the board. Like, I always say this, it's a funny thing to say, but like, if I got dropped in here from Mars and I was like listening to market structure experts debate this and say, "Oh my gosh, we have to fix this asset class because um, we think that these customers are being disadvantaged," I would go, "Oh yeah, you mean the fixed income, right? With inverted pricing, the one that's got inverted pricing? No, no, no. The one that's sub pennies. That's
Right.
the
Yeah.
one we need to
The,
fix."
the, 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 the fractions of pennies.
I'm
Yeah.
like,
So,
wait, what? This is the
so
one we're talking about? Like,
yeah, that's funny. So, okay. Robinhood probably up like what 130% or so from its lows. I guess the next question is, what can sustain that move? Not that you need to sustain it.
yeah,
I mean,
yeah,
you can certainly rest on the laurels. 130%
yeah,
plus is nothing to sneeze at. Or I shouldn't say what 130%. I should actually add a zero there. I think it's actually
yeah,
over a
exactly.
thousand percent.
Yeah,
Pardon me. I don't want
yeah,
to shortchange you. Like closer to 1,300%.
yeah.
So that's a big move. And of course, the big fear here is, okay, stocks go up and then they kind of fall out of favor. So what do you have on your docket in terms of continuing the growth? Again, you posted some phenomenal numbers, increasing on so many metrics, average revenue per user, and so on. What's kind of the next step?
So about 4 years ago, we sat and looked at things strategically, and we said, and by the way, at that time, completely self-directed. I'm probably going to get my numbers wrong, but something in the neighborhood of 70-80% of revenues are coming from transactional, self-directed. And we set a target and said, look, there's really kind of three pillars that we're working on. Number one is being the best for self-directed, active traders, if you will.
Hmm.
And we're on a path to be there. We're getting pretty close to overtaking the largest competitors. The way to deliver on that is just all the asset classes, index options, futures, capabilities. Like, we built a web-based app, which we never had done before. Because the point that we realized was, as soon as customers get to a certain level of sophistication, this thing is great, but you need a little more real estate than that and capabilities. And so that's out there doing quite well. And the second component was, look, the number of assets that are being self-directed is X. The number of assets that are being managed partially or completely managed is almost 3X. So, and by the way, the age of our customers and where they're moving is to that, area which we discussed earlier. So we said we have to build capabilities or acquire, which we acquired the firm, to be able to accommodate that. If we're going to really grow as a firm and grow with our customers, we're not going to get, we call it share a wallet, which I'm sure you're very familiar with. We're not going to get over a certain percentage of share a wallet if we're not being able to accommodate all their financial needs. And then the last component of this is, until a couple of years ago, we were completely domestic. And,
Hmm.
in my experience with competitors, everywhere I went, because I had businesses in other parts of the world, there was a Robinhood of Australia, a Robinhood of Singapore, a Robinhood of the UK, a Robinhood of Canada. And we said, why don't we just be the original? Like, that's what they really want. They don't want some knockoff, they want the original. And so, we've started that expansion overseas. And the vision and the desire of Vlad is to be the, financial services company that can accommodate any of your financial needs, like all your transactions. And
Hmm.
that's not just in the US, but globally.
Right.
So I think that, like, when you set up the highest North Star, that's where we are. How we get there is you continue to build on things that are like, I mean, of course, there's very interesting things we're doing from an AI standpoint with court like digests on what's happening with stocks. But there's also things that are just, I almost call them plumbing. Like, hey, we don't have joint accounts. There's a lot of people with joint accounts. Hey, we don't have, custodial account, trust account. We don't have this asset class. We have to continue to build those things so that there's no reason why a customer wouldn't be here.
Right.
And so we're probably mid journey there, but
Hmm.
I would say one thing, and I've been at a few brokerage firms. We crank, we move very quickly here, and we have a strong pipeline, and we deliver a lot of things in a timeline that I don't think our competitors compete with. So that's healthy, and customers look for it. They tell
Hmm.
us what they want, and when you deliver it in a timeline, it surprises them.
Yeah. Well, speaking of something that you're getting into, I also want to kind of get into the sports side of things.
Yeah. Hmm.
Not many people think of going to their brokerage firm
Yeah.
to with their interest in sports, but there is. This interesting thing that's happened. I mean, with the one big beautiful bill, anyone that is a gambler is probably looking at some serious tax tax differences in how the gambling winnings and losses are going to be treated, that really disincentivizes in a big way the whole gambling, how the math pencils out.
Hmm.
But you're possibly providing a loophole around that. Can you talk a little bit about what this new product is, and how it works?
Sure. So it's the product is it's event contracts. It's essentially, think of it, something akin to a future,
Hmm.
which, the
A
tax,
futures contract,
yeah,
right?
futures contract, which the
Hmm.
tax treatment very advantageous.
Advantageous.
Yeah, very advantageous, as you point out. And
You get a long-term capital gain
yeah,
for
the
those
60/40, it's
60/40, right? Mhm.
yep, exactly. But event contracts, the first one we rolled out was around the presidential election.
Mhm.
And we rolled it out a week before the election because there was some regulatory clarity that it was going to be permissible. And we built that thing in like 2 weeks. And the week before the election, we launched that. And, we had 600 million contracts traded on that.
Mhm.
And I think the most eye opening aspect of that was, even people who weren't interested in using it, because if you think about it, it was really a hedge for your portfolio. If you had a portfolio that was
Yeah.
heavy on XYZ, it's going to be impacted pretty dramatically. um, we're sitting in a New York room watching this trade back and forth, and the major networks are not calling the swing states, and these contracts are going like this, like it already was known. And so people looked at that, even people who weren't trading it looked at it and said, oh my gosh, I'm buying Tesla, oh my god, I'm buying crypto, I'm buying et cetera, et cetera, et cetera, well beforehand. So what I think is the most fascinating aspect of event contracts is that the information that's available
Mhm.
to glean from those, and you see it now. It's in articles all over the place about the different prediction markets, and how you can understand how something is being perceived. Like a poll is great, but let's be honest, like polls don't have any dollars behind them. So
Yeah, right.
I'll take a something with dollars behind it at any day of the week.
Uh-huh.
So it started in elections, then it moved to economic figures. Are rates going to change? Are they not going to
Mhm.
change? And then now it's come into sports. So that's what we've recently released is in sports. And so the other thing it lets people do is they can, like, it's funny you mentioned that you wouldn't picture it within a brokerage app, but
Right.
I
Hmm.
would say what's been surprising to us is like the whole narrative on sports and as what it is and how it is. It like I kind of feel like if you take a look at where we were 10 years ago, take a look at where we are today and where we'll probably be in 10 years. Think about it. Let's think about it. Let's see. There wasn't a sports team allowed in Vegas right in 10 years
Hmm.
ago. And now
Hmm.
look at it. No league would mention any of these sites. Now they're partners or owners of most of these sites.
Yeah.
So I just think, like, I think we as Americans put a stigma on this, but sports is a complex. Like,
Hmm.
sports is it's a business. It's a large business. And I'm originally from Wisconsin. My daughter's a reporter in Wisconsin, in
Hmm.
Milwaukee, and she did this story about the Bucks were the number one seed, and they were perceived they had won the championship. They're perceived to be going. This is going to be great. The whole complex around the Deer District, all the restaurants, everything, they get bumped in the first round. They lost hundreds of millions of dollars. Hundreds of millions of dollars.
Right.
That's hedgeable.
Yeah. And you
That's
know what?
hedgeable.
I'll be honest with you. When you were talking about the election as a hedge, I was like with you. The economic parts as a hedge, I was with you. And then I'm like, but how is this a hedge? I really, I'll be honest, I'd never thought of that. How,
I'll take it
uh,
down to another. I'll take it
hmm
down to the personal level. I'm an Eagles fan last year.
hmm
I have season tickets. I have 4 season tickets.
hmm
If they go, I'm probably paying for 2 seasons, right?
hmm
If they don't, it's going to smack me in the face.
hmm
That's hedgeable.
right. Uh, Now, I guess the other side of the concern is, for people that have a gambling problem, are you
Oh
making it
yeah.
too easy to, now you can access more funds and get yourself into some real trouble? Because again, you're talking about the smart,
Yeah.
hedgeable, like,
Hmm.
making very calculated decisions, as opposed to just needing that dopamine fix. So, I mean, do you have to start saying, oh, here's your brokerage and also the number to gamblers anonymous at the same time, or
I mean, we're very careful. Like, so, you're probably familiar with some of the sites and apps that exist today. You just sign up and put money in. You actually
Mhm,
have to become a customer of Robinhood and have to go through some suitability to get
mhm,
to this. And of course, I'm not saying everybody using it as hedging. Of course, they're not.
mhm.
People are, and look, if if we want to get really specific, like I don't know how many people who trade oil are hedging,
Yeah,
right?
right.
They're not
Yeah,
hedging their
yeah,
drive.
yeah, yeah. They're
Or,
vast oil reserves.
yeah, or they're not
Yes.
hedging. I have a 40-mile drive and I just
Yeah.
want to make sure that it's so I mean, like
It's
people use
speculation, right?
exactly.
So,
Yeah.
yeah, very good point. Before we go, Steve, I want to just kind of chat a little bit about the current market environment,
Yep.
because there is, again, we've had such a move, this year, and the market's been getting in a little bit of pullback mode.
Hmm.
We had an upside reversal today, but is there any behavior that you notice from your customers, that you kind of feel like gives you almost like a leading edge, a leading indicator in terms of sentiment or anything like that about what's happening with the overall market, macroeconomic picture?
Hmm.
I mean, we've got Jackson Hole coming up on
Yeah.
Friday,
Yeah.
Fed meeting, and September inflation, and do you ever get a sense? Again, I guess maybe that crowdsourcing
Yeah.
idea
Mhm.
that you talked about with the election itself. Do you ever get any sense of sentiment changes, just by analyzing what's happening with your customers?
We do. Yeah, we have something which it's called the RIX index, which basically looks at the top 10 symbols in all of so we basically look at the top holdings of all of our customers and that we do it very democratically. So like we don't want to, anchor or skew to somebody who has a 20 million account over somebody who's got a $20,000 account.
Mhm.
So it's like what percentage of my account is in Apple, right? across the board, and then rank that, and then we look at the behaviors of most interesting is not what it is stagnant, it's what's changing, what's a delta, what's happening over the last 4 weeks, etc. So we do it monthly. Um, and what it illustrates kind of time and time again, and by the way, we overlay it on the NASDAQ too,
Hmm.
because we I can't stand the narrative that self-directed is getting killed and they buy at the top and sell at the bottom. So instead of just trying to convince people that's not the case, we just show them the data and say,
Yeah.
hey, here you
Go
go.
go from anecdotal to
Yeah, here you
hard
go. Here you
data.
go. Take a look. Look at what the
Yeah.
Nasdaq did last month. Look at what our customers did last
Hmm.
month. Right now, go look at your hedge funds and see how they did. Right.
Hmm. Hmm.
um, but the other thing, the thing that's most fascinating about it is they're mini portfolio managers. So like they were able to buy the most popular names on the tariff news at ridiculously discounted levels,
Right.
and as soon as they get that appreciation, they roll out of it. Not
Hmm.
all of it, but a component, that portion of it. And I just did an interview the other day, which was fascinating because I said they were asking the point about, oh my gosh, did your customers were they buying United Health and after after Trump new or sorry the Buffett news? And I
Hmm.
said no, 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 they were buying it before Buffett bought it, like because that and Lilly, the ones that were getting hit the most and that they thought were being overly uh, overly, the moves were exaggerated to a point that they thought the news was, although bad, it would, there would be a bright side to it eventually. And so this rotation happens. It's almost consistently happening with names that they think are getting unfairly beaten down, and
Hmm.
ones that have rallied in a manner that's a little too quick. They just rotate, and it's cool to see,
Yeah.
because that would be behavior you'd assume would be more akin to a professional. But again, back to our earlier point with the education and content, and you guys are part of that. it's it's awesome. It's great to
Hmm.
see.
Hmm. Well, one other thing I just want to kind of close with is I feel like, certainly what got you on at the attention of Investors Business Daily. I mean, we have our best online brokers, and the app, was,
Yeah.
kind of one of the things that, and again, I know that there was controversy because of gamification and like, oh,
Hmm.
the confetti and stuff like that. Are you not treating this seriously
Yeah.
enough?
Right.
But what's kind of next? Is there another level to conquer? You already mentioned, and I just want to kind of address a question that we got on the YouTube comments. At the outset, you kind of addressed that the age of your customer does
Yep.
skew younger,
Yep.
in the 30s as opposed to, um, you know, mid
it's
50s.
it's late 50s at firms I find.
Okay.
Yeah.
So what's next? You really kind of got the app really allowed you to get your foot in the door
Yep.
with that generational cohort. What's next to maybe get get more people in? Is it just based on the app, or I don't know? Do you go virtual, virtual reality trading, or what's next on your agenda?
Well, we're going to be at the cutting edge of technology. I can guarantee you that, because
Hmm.
that's sort of the ethos of Robinhood. But I would also say we are so deeply aware of what our customers are looking for. So again, I kind of led into it: retirement accounts and yield accounts and all the things that they're looking for. But on the sort of in addition to that, like it's also fun to deliver things that they would have never imagined were possible. You know what I mean? So like, AI is going to help us in some context there to make this investing journey a lot smoother and easier for them. So I would say stay tuned, because we're gonna have some pretty exciting announcements coming along.
Awesome. Well, we'll be on the lookout for that. We'll be on the lookout for what happens next with Robinhood itself. I did have a position. I wasn't sure. I almost bought it back today because it had an upside reversal, but I was like, I don't know if that's compliance okay. So I don't have a position, but I am looking at it. But Steve Quirk, Chief Brokerage Officer at Robinhood, thank you so much for being on the show. Really appreciate you sharing those insights so we can understand a little bit more about the company.
Thanks for having me, Justin. I appreciate it.
Okay. That's going to wrap it up for us this week. Hope you enjoyed that. A little bit different from our norm, but it was, again, good to hear about one of our model book stocks and what's going on there. Please join us next week because we're going to have Kathy Donnelly back on the show. She, of course, is a prop trader, one of the authors of the Life Cycle Trade. She has her mental capital preservation rules, so we'll see how this drawdown is affecting her and what she's doing with some of her positions, like NVIDIA, that she's had for quite a long time. So hope you join us for that. We'll be at the same time next week, 5 p.m. Eastern on Wednesday. Hope you join us. Thanks for watching.